What's up, traders? I wanted to give you a quick glimpse at this week's virtual meetup. I like to have virtual meetups because if you're a trader, you understand it can be really lonely out there. And if you just want a community where you can talk to people who understand you, this is going to give you a really quick glimpse at part of the virtual meetup from last night. I like to have a little bit of teaching in our virtual meetup. So last week I talked about ex-dividend stocks. I covered what I'm looking for in ex-dividend stocks, how I find them, why I get in, buy low, sell high, why would I get in Walmart over Target. We go into some very specific examples. We look at the charts. If this is something that interests you, you should check out mrmoneymaxwell.com/connect. You'll see when you scroll down, the next virtual meetup is Thursday, the 28th, right when the market opens. We get on about 30 minutes before the market opens. We stay in 30 minutes after the market opens. This just happens to be right around NVIDIA reporting. So it's going to be a really fun meetup. If you can't make it because you're at work, hop on over to September. You're going to see on the 15th at 7 o'clock, we have a virtual meetup in the evening for you. I like to keep one in the morning and one in the evening. So head over to mrmoneymaxwell.com/connect. Grab the calendar appointment. I will see you then. Hey everybody, I should have recorded the virtual coffee that we had the other day, but Zoom happy hour. I said I'm going to keep it informal, but I kind of know how these go. I did bring up a topic for tonight that I do want to cover, a really cool topic on dividend stocks. If you guys don't know, I love dividend stocks. They are the most passive income there is, period, bar none. What is going on with the dividends? And I know that a lot of you all are in the inner circle, so you have access to my dividend watch list. The dividend watch list is awesome. These are all the dividend stocks that I really love to trade. If you're not in the inner circle, you should join it so you can get the watch list for free. But what I love about TradingView is that you can come through here and you could type in, random stock like Target has an ex-dividend this week. So when you see that it has an ex-dividend, what I like to do is I love to use the colored watch lists in TradingView. So I'll go in and I'll just tag it. Like right now, my ex-dividends are pink. I changed the colors around, but currently they're pink. What I have done, I'm a big fan of saving time and saving energy. So if any of you guys really find interest in this and you would like for me to start publishing some of the watch lists that I have, subscription over to Unusual Well, so I can see the dividend stocks that are paying for this week, and I can go into next week, and they have different filters, right? So dividend kings, dividend aristocrats. These means that what kings and aristocrats mean that the company has raised their dividends for the last 25 and 50 years respectively. These are really good history of dividend paying stocks. I went through this list. I kind of grabbed these whole lists and I put them on the pink watch list. So dividend to pink watch list. Sorry, you already missed out on these 4 stocks that paid dividends today. Ex-dividend date, you have to be in before the ex-dividend date. So you need to be in, if it's going to pay it on Monday, you got to be in on Friday. A lot of people, this is a question that I've gotten even from people who have been trading for years. They're like, Justin, how do you make money on a dividend stock? Because on ex-dividend date, the stock is going to gap down by the amount of the dividend. Let's just look quickly at Granger. It's the top of the list. Ford is, man, that chart's small. Let's go to the daily. For old people like Justin, let's make the charts a little bit bigger. Now, I know this is a $900 stock. None of us are going, well, I'm not going to be in a $900 stock with $90,000 of a stock, but you could have one share maybe. But if you look, this $900 share paid a dividend of $2.36. So it did gap down. This is an example of where, hey, you didn't make your money back today. But an ex-dividend, let's think a little bit further than one day. Let's think a little bit further than maybe a week or a month. Over time, you're going to make the share price back. Sometimes you make the share price back in one day, but it works out. Pittsburgh Plate Glass is a really good example. Yesterday, which was Friday, I know, but I'm going to say yesterday, the stock closed at 106. It paid a dividend this morning of 71 cents, and it gapped up on the ex-dividend. So as I'm just trying to show you that that mindset of the stock gap always gaps down by the amount of the ex-dividend. How do you make money in a dividend stock? Well, first of all, you zoom out. You zoom out over time. Pittsburgh plate glass might not be the best example of zooming out because it's in a bearish trend, but generally these stocks go up. Wait, let's look at one that goes up over time. Walmart goes up over time. They go up. So they pay a dividend and they go up over time. Now, one of my favorite things to do, if you guys don't know, I have a vendetta against Target. Okay. I don't trade Target. It's a personal thing. I know it's a bias. Listen, Brian Cornell, he's a CEO. I know he's a CEO because he cost me a lot of money when he did not report. I still have it on my chart. Sometimes you put arrows on charts and you never forget them. Like this is one of them. I always joke with Christian, who's not here, about Rivian. Like I can't trade. I love the truck. I can't trade Rivian. This gap right here from 200 to 150, that's a $50. This $5,000 per 100 shares that I owned, I had to. This $10,000 loss is something that I haven't gotten over. Okay, I haven't. So when Target and Walmart both have dividends this week, you can guess what stock I would rather be in. Walmart. Okay. So there's sometimes you just never forget things. So like Walmart and Target both are paying a dividend this week. It makes more sense that if you did not have a position and you didn't have a bias, you would get into Target. It's paying $1.14 for $100 stock. You could hop in, jump into the options chain. Oh, it has earnings too. You probably want to get out before earnings, but look, you can sell a cover call, get in really quick. You could almost enter a caller to where you can't lose. Let me check all these DMs that I'm getting in Discord to make sure people can join. Let's see. Oh, it's Eric. He's here. Yeah. So my point is, of Walmart and Target, if you weren't biased like I am, you would much rather buy low, sell high. All right. So Walmart looks like it's pretty high to me. This is an all-time high of 105. It's trading at 103. Now it's paying a little bit less of a dividend. It's paying 23 cents. And the reason that it's paying less of a dividend is because Target has a really poor leader and they can't grow their share price. So they're giving you more of a dividend. This is not a joke. A lot of new investors come in and they say, I'm going to pick a dividend stock that pays $15 for a $10 stock. It's a 70% dividend. That's a warning flag. You need to pay attention to that. And I'll show you a really good example of this. It's Zim. Zim is an international shipping company. I think they're based out of Israel. I chased this stock for a really long time because, let me back it up just a little bit. They were paying a $2. This stock was $9. It was paying a $2 dividend. Their dividend got up to as high as $17. Whoa. $17 for an $18 stock? What? There's a lot of money to be made. You know how much money you can make on $17 dividend? Yeah, well, what happens when they pay that dividend and the stock goes from $20 to $10? That $17 dividend does not help you anymore. So my point is, don't just chase the highest dividends. When I go into the screener over here, you can see, let me take it off of Dividend Aristocrats. You can sort by yield. I don't even look at stocks that are paying 20%. Now, if you want to chase these, you can. I don't look at these that are paying 19, 17. None of these interest me. I'm looking for more conservative, like BP, 5%, which is going to be on the watch list. This is my thought process. Don't chase these high dividend yields. It's going to end up like Zim, where you get paid $17 for a $17 stock and the stock drops by $25 and that dividend doesn't make a bit of a difference. So let's jump in really quick. You know why I'm not trading Target, but I'm also not buying Walmart here for a dividend stock. Like, it's too high. I'm not buying a stock at an all-time high for a $23 dividend. That does not make sense. What I really love to do is I love to go into stocks that are paying a dividend like in a week or two, and I love to sell a put. I sell a put and I create the dividend. Amber's been joining me in these trades. I think Eric's joined me in some of these trades before. Christopher, you haven't joined me in these trades. Let's go over here and look at Discord. Oh, I'm already there. EMR. Look, here it is. This is no coincidence. I saw that this stock was paying a dividend. I knew that it was a dividend aristocrat, meaning it is a good high yielding dividend stock. I sold that 115. It filled and the target hit what, how many days? Oh, the same day. The same day. I collected a dividend the same day. Let's hop over to EMR on the chart and let's just look at it really quick. You can see it's in a nice trend overall. Go back to the chart where Justin can actually. So you can see on 8-6, do you see why stocks gapping down big? Stocks gapping down big. I know it's coming up with an ex-dividend. Why not go ahead and try to own some shares? Like worst case scenario, I'd love to put those shares, but I'd also love to never have to own the shares and collect a dividend synthetically, I guess you would call it. But this is a decent stock to consider getting into. I know it's a $130 stock. It's going to pay a dividend of 52 cents on Friday. Where would I really love to buy it? What if this stock could just come on down to right around in here by Friday? I know I'm probably asking a little too much, but if it could come down to like 125, I'd love to pick some up right off of the 100 and 200. I think a lot of people don't think about this, but keep in mind, you could put up a stop loss. Like you can get out like, hey, my max loss on this is $200. Just set up a stop loss. And if it gaps down, you're out. But these are the dividend aristocrats. Like same thing. You guys kind of already probably onto my jam. But I'd love to buy some MSA. Don't even know what the stock is. I know they're a dividend aristocrat. I know I'd love to own some around 160. I wish these stocks weren't so expensive. AWR is not. We'll talk about a really pretty stock that I'm going to be setting up tomorrow in just a second. I'll stick with me. We're going to talk about a really good trade we're going to set up. AWR, this is a water company. These are boring companies like Eric was talking about, but they have a place for everyone's portfolio. I think everyone needs a little bit of boring. We all love the sexy tech stocks. We all love the dividend. We all love the Nvidias. We love the Robinhoods. We love those fun stocks, but it's good to get in some of the boring dividend stocks like Southern Company, which I own. It helps me. I pay them to charge the Tesla every night. So I feel like I have to own them. A lot of these stocks are beat up. These water stocks, this actually looks like a really decent play to me as well. Dividend coming up, if I could click the right button, 34-cent dividend on a $50 stock. Not bad, but do you see how it's kind of holding on to the 10? I really like stocks that are kind of holding on to the 10. Would I love for the 100, 200 to be below it? Yes. I said I wasn't going to talk too long, so let me keep going. ExxonMobil is paying a dividend. This looks really heavy. We got closes below the 100 and 200 on the daily. If there's nothing holding this up on the weekly, I'm not going to take this trade. Do you see why I'm not going to take this trade? Like, there's nothing holding this stock up. So I don't really care about the 99-cent dividend unless you want to own ExxonMobil for a long time. Maybe you wish that you were in ExxonMobil instead of Occidental Petroleum. Maybe you would rather be in that. I would. I like Chevron. I love Chevron too. When is their dividend? See, Chevron even looks better. The 19th, next week. I'd rather be in this one than Occidental. Why not follow Warren Buffett? What does Warren Buffett know? BP looks better than Occidental. Okay, I'll stop. BP actually looks better than ExxonMobil. Do you see how BP is above on the weekly? Let's look at the daily really quick. It's above. Like, are you buying high here? Yes. Are you buying as high as it's ever been? No. Like BP has been to 37. The only problem with BP, Christopher, don't hate me. It sounds like you and Christian are from the same place. This is an OTC company, so it's traded on a different exchange. So be a little bit aware when you see PLC and like Novo Nordisk. Novo Nordisk is A/S.
Ooh, that's
That
a
means it's
dangerous
traded
one
on a
right now.
foreign exchange. What were you saying, Christopher?
Novo is a dangerous one right now.
Yeah. Novo is traded
Yeah,
on a different exchange. I was showing
yeah, and,
BP.
and it's
BP
a
is also
dangerous
traded
one
on a
right
different
now.
exchange.
So I would not touch Novo right now. until things
Well,
have settled.
you should talk to your buddy who
I know.
who
Yeah, I
spammed
know
you
who you're
into
talking about.
joining
Yeah.
my inner circle. You should speak to him about this.
I know.
We talked about
We
it
do
this
talk
morning.
about.
All right, inside baseball there. Church into White. Do you know what OxyClean is? Like boring, Arm& and Hammer, boring stock. Listen, I know this chart looks terrible. I know it looks terrible, but do you see what I see? Do you see what I see? A purple line. There's a purple line on the chart. And purple lines mean there's weekly support and resistance. I can already see it. Do you see all the weekly support and resistance right here? Church into White is going to pay a dividend on Friday. I'll probably get into this trade. This is not the best trade. This is not the best trade, okay? Stick with me. Best trade's coming up. This stock is sitting right here so close to 90. It's so close to 90. And I know it only pays a $30 dividend, but I'm still going to hop into that. I trade this stock. I usually sell puts on this to try to get in. I don't know why the IVR is a negative 10. That's usually not a great sign, but but you can still get in here. Um, okay, the cover calls aren't looking really great after all. It was looking better when I looked this morning. Um, all right. Maybe I'm trying to force this trade just because I like this really boring stock on a purple line. I kind of like this one. Talked about stocks that are trying to trade sideways. I know this is a $233 stock. We're not going to spend much time on it. Southern Company, Kroger, too high, right? We buy low, sell high. By the way, I saw a really crazy story about grocery stores. Do you know that you know how you put in your phone number at the grocery stores? They know more about you than anyone else because they know exactly what you buy. They know what you buy and what you consume and how often you consume it. Do you know? Okay, this is totally off of Instagram, so I don't know if it's true. I did not fact check it. I have no idea. 1/3 of their revenue comes from selling your data.
What? That's crazy.
I believe it. Like now that I'm thinking, like I use Publix. I don't know about you. I use Publix, but I put my phone number in there and they know exactly how often I'm buying crab legs. Like they know. They're like, oh, Justin got a good trade. He's buying those crab legs again. Oh, like, oh, did he just buy a bag of chips? He shouldn't be doing that. That's against his diet. But I never thought about that until then. Like, I like Kroger more as an investment now that I understand that they're more than just groceries. But I'm not buying at 74. Where am I going to buy it? I'll buy it at 70. It's $5 difference. I know, but I'm buying it off the blue line. Sherman-Williams, really expensive stock. Okay. I have no idea what Bro does. I have no clue what Bro does, but I know that they pay a 15-cent dividend, and I'm not going to trade this. The only way I would trade this would be a really nice morning star reversal if we could get a close up here. But don't try to catch stocks that look like their ski slopes down. Just there's better trades like Starbucks. Look at Starbucks. Look at Starbucks forming this really pretty hammer after a really bullish day. I'm thinking I have to get in this tomorrow. And I might be YOLOing in a little bit, but Starbucks is going to pay a dividend if I could click on the right buttons in TradingView by now. They pay a 61-cent dividend, not quite 1%, but hey, I'm going to take this trade on Starbucks. I'm going to put a little bit of risk at play here just for a really quick move. Really quick. Okay. Maybe not that quick. Let's try to get one. Let's try to get 1R. I like this trade. I think this is really pretty. You might want to take off a little bit here, but I really love this hammer. I love that, you know, we've already taken out the candle with all the volume. Would you have loved to have bought it off that red line where I sold the put? Of course. Would you have loved to own Nvidia forever? Of course. This is a really decent dividend. You guys know, I think you know, like Starbucks has good options. You can go ahead and you could even sell like a 90. Listen, I know it's only 38 cents, but if we could get out at 94 in 4 days, like that's right where the red line is. Would you buy 100 shares, collect the dividend, sell the 94? So you're going to collect like 40 cents there. You're going to collect 60 cents here. You just made $1 in premium to get called away $3 higher. This will be a trade that I set up tomorrow. Now you kind of see why. I like the chart. I like how it bounced off of the blue line. I'm really expecting it to go to the red line pretty soon. It might even hit the red line before ex-dividend date. And if that happens, you're going to get called away early. This is one thing that you always have to be aware of. Let's look at Apple really quick, and then I will shut up and we can just talk. Apple had a dividend today. All right. And I don't know. We don't get political at Good Kids Trading. We don't. Okay. Tim Cook took this like gold bar and he gave it to Trump on Wednesday. How do I know? I'm just looking at the chart. He gave Trump this gold bar on Wednesday and the stock went up 13% in 2 days. So my point is, if you're like, oh man, Apple just keeps going down, I'm going to sell this 215 covered call. If you had a 215 covered call and an ex-dividend date is coming up on Monday, you're getting called away. They're going to take your shares at 215 so they can get that 26-cent dividend. I know it doesn't sound like a lot, but it makes mathematical sense for them. So my point is, you have to watch your positions, especially if they pay dividends, because you don't want to get called away early. Or maybe you are okay with getting called away early, but just be aware. If you are in the money on a covered call, they're going to take your shares on ex-dividend date. All right, that was me covering ex-dividend stocks. I'm not going to go ahead and include the rest of the call where we talked one-on-one. We covered some individual issues about how do we handle risk? How do we set up our accounts? What's our buying power usage look like? What are we doing in the current market for our accounts? Since it was personal, it wasn't just me talking, I don't want to share that with you here, but that's more reason for you to join our next meetup.